We're just over 10 hours away from those inflation numbers in the States. What is your view in terms of your expectation in terms of what we're going to get?
Well, in terms of expectation, I think we should see some softness in the inflation numbers on a year-on-year perspective. And I think that's also factored in. And we do hope that is actually going to calm some of the market concerns that inflation is not a problem. I think that's the most important thing. Yes, we move back from a disinflationary world into a normal inflation world, but that doesn't mean that inflation is a problem and the Fed needs to accelerate its rate hike path. So I think that's what we expect in 10 hours from now.
Okay, so if we're going to see some softness, then was all this volatility that we saw in the markets over the last couple of weeks a massive overreaction, and does that mean it's over?
Well, let's a little bit look into some of the asset classes. So first of all, yes, equities obviously reacted most. It was quite interesting to see that actually the area of weakness or of vulnerability has been actually the US stock market. And if you look at other asset classes like the FX, you haven't seen much of a development. So it was more of a sideshow, even on the commodity side. Yes, oil came under pressure, but overall, we haven't seen much of a contagion effect. So I think the market will start to get used to more inflation and pressure. But since inflation should not run away the way we see that, I think markets can calm down. And then you look again into what 2018 is all about. Solid growth, good earnings, and I think the risk on trade is going to be back on the table.